Gina Shumway here with Titan Group at Keller Williams Greater Chattanooga. In today's video, I want to explain the difference between tax assessed value and market value, specifically here in Chattanooga/North Georgia area, and why it matters if you're buying, selling, or investing in real estate. So first, what is tax assessed value? This is the value that the county or the area assigns, the tax assessor assigns to your property for property tax purposes. The county uses assessed values to calculate what you owe in property taxes each year. In Tennessee, assessed value is not meant to represent what your home would sell for. It's simply a valuation used for taxation. Here's how it works. The assessor looks at things: lot size, square footage, age of the home, condition, some comparable assessments, any improvements made. Improvements use like buildings and those things. And then that number is used to calculate your tax bill based on the tax rate set by the city, county, and other local taxing authorities. Okay, so what is market value? Market value is what a willing and able buyer and a willing seller agree on in current marketplace. Okay, so this number matters most when you're selling your home, buying a home, doing a comparative market analysis, and evaluating investment returns. Market value fluctuates with supply and demand, interest rates, neighborhood trends, recent sales, and buyer preferences. So the big difference: tax assessed value is used for property taxes set by the county assessor, often lower than market value, not directly tied to recent sales. And then market value, based on what a buyer will actually pay, that's key, based on recent sales and current conditions, what you see in a comparative market analysis or CMA, and most important, pricing and negotiations. In most cases here in Chattanooga, the assessed value is significantly lower than the market value. That's normal because assessors update values on a schedule, and property taxes kind of lag behind the actual market activity. Now, we did just have a reassessment in 2025, and I feel like those have gone up significantly. I know my property taxes on my investment properties have, but still, in some cases, it is lower. So why does this matter for sellers? For sellers, it's critical to understand that you cannot price your home based on assessed value. If you do, you're likely leaving money on the table and undervaluing your home. Instead, we use a market analysis, comparing recent sold properties with similar features, location, condition, and size to determine a competitive listing price. Assessed value is just one piece of data, not a pricing strategy. So, why does this matter for buyers? For buyers, understanding assessed value can help with estimating property tax, planning long-term holding costs, comparing neighborhoods, and evaluating investment property cash flow. Remember, just because taxes are based on assessed value doesn't mean your purchase price is necessarily tied to it. So, quick example. Let's say your Chattanooga home has a tax value of $180,000. That recent comparable sales in your neighborhood are closing between $260,000 and $280,000. Your market value, what a buyer will realistically pay, is in that $260,000 to $280,000 range. The tax assessed value is just used for taxes. It's not a ceiling or a floor for pricing. So remember, tax assessed value is exactly that, for taxes. Market value is for real world sales. If you're thinking about selling or buying in Chattanooga and want a market analysis that reflects true current market conditions, reach out. I would love to help you. I'm Gina Shumway with Titan Group at Keller Williams Greater Chattanooga. If you found this helpful, please follow for more real estate insights. Thanks for watching, and I'll see you next time.